Hello, welcome back to the Dapper Dividends Dividend Dive. I'm Russ. How's it going? Thank you, first of all of you hanging out here, spending a little bit of your time with us. But I wanted to share something with you that, I love. This is Alex Morris's Buffett and Munger Unscripted. I love that there is just, you can flip open to any page, and I thought I would do that. And how cool. Check out what they were talking about with discounted cash flows. And I know we have the Sunday Investor Watch. And dude, I love your articles on Seeking Alpha. It's just really well done. Really, really well done. But everybody wants to know the exact intrinsic value of something. And you've heard me say it's like looking through the Hubble telescope. And that's not my quote. It's like looking through the Hubble telescope. You turn it a fraction of an inch, you're looking in a different galaxy. So Charlie Munger in 1996 said, Warren talks about these discounted cash flows, but I've never seen him do one. If it isn't obvious that it's going to work well, unless you do the calculation, he tends to go on to the next idea. And then Warren said, it's true. If you have to actually do it with pencil and paper, it's too close to think about. It ought to just kind of scream at you that you've got this huge margin of safety. And Turbo, seeing you talk about your oil stocks, that's what I did with ExxonMobil when I was buying Exxon in the 40s. I think I even got a couple of shares in the 30s, maybe. Absolutely bonkers. Here we are, over $160 for ExxonMobil. You guys, unless you're living under a rock, sorry, SCHD Stan, our friend Craig, is getting back to us about a message there. But dude, look at all you guys. So happy to see you. What a week. It's crazy. And I on the thumbnail, I put the market crashing, right? It's crashing. No, it's not crashing. It's less expensive than it was a week ago and a few weeks before that. So when you hear that, all that fear and all the, stocks are, look, an individual company, right? It could be very risky, but if the whole entire market, it's not going away. And if it does, your stock portfolio is the worst of your worries. So, Kevin, yeah, man, I'm reading the headlines and I don't know where it's going to go. Macroeconomics are incredibly difficult to predict. Nobody knows what's going to happen because, again, there are there's more than thousands of people. There's billions of people making trillions of combined decisions every single day. And then every one of those decisions interact with everyone else's decisions. And it's kind of cool because we don't know exactly what is going to happen. So nice to see you guys get caught up here a little bit. Sorry. Hey, sometimes the brain starts moving. I'm thinking of what I want to say. I'm reading your comments and, yeah, but Michael bought more Apple. If you guys listen to the Compound and Friends, real interesting thought. Josh Brown thinks that Apple is going to be, or is the underlooked AI company, because he thinks they're going to just buy some AI technology to make Siri agentic. And when Siri becomes agentic, it will interact with all the apps on your phone. And he thinks that'll be like the next big unlock. So will that happen? I don't know. Yeah. And Steve, it's funny that a lot of people, Sunday Investor, man, you nice job. Nicely done. Beat a lot of people to it. Janice, glad you're not licking the new reconstitution, but liking it. And again, like Craig would say, and I'll actually be live tomorrow with Ryan and Craig talking about live, whatever you guys want to pop in and talk about. But he says, trust the process, right? When you buy any ETF, you're buying the methodology. So you can't just buy it because, hey, if somebody bought SCHD because it held AbbVie, well, guess what? AbbVie got booted because the stock price has gone up too fast. And now it's removed. And hey, whether you like it or not, yeah, some people don't like that. It seems to boot the winners. But also, as my guy Sunday Investor said, with SCHD, it's almost like an inherent buy low, sell high. And for better or worse, that's what it is. But again, as he showed, when you zoom out, The further you zoom out, the longer the time horizon, it preserves your capital, it grows it, and it grows the income that you're receiving. So it's more of an income. And it's not the only thing you should own, right? Nobody should be 100% into SCHD. Yeah, too much. I don't want to get too much into the weather stuff. It's funny, but again, weather is like macroeconomics. We don't know what's going to happen. And yeah, hey, one day you're hot, one day you're cold. Oh, so that's what Turbo you came from. Okay. Shannon, you're selling all things oil. Man, I don't know. I've thought about it because I'm up so far on ExxonMobil, but we don't know what's going to happen. We just don't know. But speaking of what we started with Warren talking about that screaming margin of safety, with the dividends I've received, I'm sure I'm under $30 a share because I bought those shares in 2020, right? In the summer of 2020. So my cost, I mean, even if it goes back to 100, so be it. But that's the nice thing. You don't have to do anything. I don't have to do anything, right? Because I'm not a professional fund manager. I'm only managing my portfolio. Michael, yeah, I hope you like that. And sometimes I don't know what to write about. I worked this morning. Yesterday was busy. Oh, check this out. We're looking at colleges with my daughter. My oldest is 18. And we went. Now, I've seen this at another college in Marquette, over up in Janice. You're probably familiar with Marquette, just outside of Milwaukee. But I see this when we were touring and they go into the business center and entrepreneur. I'm like, oh, I need this.
Certified in a variety of business-related fields. Traditionally, they're $200. Here, they're free. You don't necessarily have to be a business.
Whole length of a wall, probably 40 feet or something. And it's just a continuous stock ticker with all the companies. And dude, that's awesome. I love that. Probably a little bit out of my price range to just put it on my wall, but yeah. So Michael, no police showed up, but I do enjoy writing crazy things like that. And hopefully they can make a little bit of sense and be a little bit different. And that's where I can be different, is that I don't have to be professional, right? This is my hobby and I'm enjoying that you're here. So thank you. And again, we'll do news. Simply Safe Dividends has a little bit of news. And I don't know, has anyone popped in on the index futures? Looks like the S&P 500 futures are down 0.19%. So that's nothing. It ain't anything. But yeah, they've done nothing but go up since 2020. Whole world runs on oil. I remember that. We all thought the world, when everybody was peddling the fear, uncertainty, and doubt that oil was going away. No, it didn't. What's up? It's always nice to have cats. I'm more of a cat person myself. It's going to sound a little bit. Hey, cats to me are kind of like when you have a good company, when you have a good company that you own, you don't have to babysit it constantly. You can leave it alone for a few days and it's still going to do well. It's going to be okay. Our friends and family that have dogs, when they're pushing 8 hours away from home, all of a sudden they're like, I need to get back. We got to get back home. They got to let the dog out. But yeah, with the cat, sometimes we're like, hey, let's take a 2 or 3 day trip. Cat's fine. He don't care. Maybe he does care, but he shouldn't be so much of a jerk then. If he no, but anyway, we love very cat friendly here on this channel. So Shannon's selling. And again, share with us what you're buying, what you're selling, why. A little bit of them. It helps all of us. But yeah, Shannon, the oil stocks have never been this high in 100 years. Hey, you know what? Lock it in, man. Lock it in. Thai guy, BAM. I think we looked at it before, but I can pull it up real quick. And I did hear on a podcast I listened to this week where it was very in-depth with one of the, I guess probably you call it a C-suite from Brookfield. And it was business breakdowns, maybe. I should have had that pulled up, or how could I have had that pulled up? I didn't know you were going to ask it. So that's crazy of me to say that. But look at all these comments. Let me get back down a little bit. here. Whiskey, maybe she did. I don't know. Yeah, maybe they shouldn't trade, but aren't they going to? If I didn't know any better, Turbo, I would think that you were some of my family members. For some reason, they just, they don't. You know what? I got Apple. My work paid for it. They gave us an Apple phone, and then I got the MacBook. So I guess I got the AirPods or the Beats, right? Yeah, and I'm in the middle. I don't care. It's paid for by my work, so I'll use the Apple. But yeah, a lot of people in my family, Turbo, think exactly the same. They are just on board with Apple or with I'm sorry, with Android, Apple. Tony, we'll see if we get a Taco Tuesday. And if we do, the market's going to rip. And the longer this goes on, now that we've become accustomed to taco trade, right? Trump always chickens out. They call it. Man, I think it's going to rip. But I think the market's getting nervous. Like, uh-oh, where's the taco? Where's the taco? I don't know. Again, I don't know. Will it happen? Maybe. I won't be surprised. And I wouldn't be surprised if it didn't. Maybe it's too late for tacoing. But yeah, if you're just popping in, share with us what you're buying, anything you want to look up. We'll do some news here in a minute as I'm getting caught up with you guys. But yeah, bring on daily driven Porsche. He's all in on SCHD. Has 1.6 million worth of it or something like that. Well, yeah, I'll write that down. I'm not familiar with daily driven Porsche, but 1.6 million into it. I wouldn't do it, but hey, if it's working out for them, beautiful. Anything Patel? Anything interesting you're buying, like Aries, Hercules, RITM? Seems like MLPX and Chill is working out. Yeah, I have not added to MLPX since it was in the 50s. That's the Global X. The Global X MLP and Energy Infrastructure ETF. It's a basket of the midstream MLP energy companies that literally are the toll roads for oil. They are not as affected by the price of a barrel of oil. I guess they would be if people use less of it, and then but they're contracted with the oil companies to move their oil through their vast network of pipelines. So they have a really good business. But one thing I did do, Patel, was I sold Aries out of my taxable. I only had 200 shares. The thought was that I wanted to have a little bit of an income factory machine in the taxable, and I was willing to pay the non-qualified higher income tax, right, on those dividends. But no, is it more I'm thinking of it? I was just like, you know what? I'm going to put this in the Roth. Just be done with it. I'll never pay any income tax. I'll never pay any taxes on those dividends. So yeah, technically I sold Aries 200 shares at $18.30. Got lucky. I bought half the position, almost did the whole, but I'm going to get greedy and see if I can get the other half even cheaper. So yeah. Eddie says, do I know who James Kennel? I don't know. Ryan came out with a video. I saw that and I did not. Oh, that's funny. They should talk. Maybe I should have the both of them on. I will. So I have a bit of cognitive dissonance. You can tell that just being only dividends, and I've shared that with Ryan. Hey, it's comfortable with him, man. But I have missed a lot of opportunities because either they paid no dividend or the dividend was way too small. Because once upon a time, I remember I wanted a 2%. Like that was my lower threshold for some reason. And when I looked at like a Costco or an NVIDIA or TJX, those are, the dividend starting yield was so small. I said, nah, it's too small. And so being only dividends, if you're okay with that and you understand it, hey, good for you. But Buying more Hercules and Aries. Yeah, Kelly Green loves the Hercules, and all right, I gotta get caught up here. Too much jabberjawing. Midwifery degree from Marquette. Really, Janice? Yeah, that's one of the schools my daughter's considering. So, from what I understand, it's on the back end. It's not toward the tippy top. Costco and TJX. Rollins has come down. Those three in particular. But again, Rollins. I talked about it with Ryan. It's just that PE is over 40, and I don't know. It has twice the PE of Nvidia. Put it that way. It's like a sleepy pest control company versus a company that's changing the world rapidly. Oh, she won't do it. She doesn't want to do it. Yeah, I've tried to get her to go to the military. I said, hey, you're kind of undecided. Military's an option, but they don't want to do that too. Yeah, Kevin, I guess so. Unless there's a face ripping recovery this week, you're probably going to still have some stuff on sale. I'm getting caught up to you guys here. I like the buys. Janice buying triple QI, VOO, and VGT. I don't know VGT. I can't remember that. Triple QI, that's income generated, right? It's covered calls from triple Qs. Hey, Jay, you're watching Travelers Insurance, that is, right? Look at this. Theo. I think we've talked before because I always think your name is Theo, but it's Thor. Thor Yakes. On the eve of the reconstitution. And it's not official, as Sunday Investor said, that it's tracking a foreign. It's basically using something that is the equivalent of SCHD, and it's just in Europe, or Asia. So it should be pretty accurate. You know what, man? Somebody recommended daily driven Porsche, $1.6 million into SCHD, and I guess it's their only holding. Again, if the income from that is covering all your bills and that's all you're concerned with, I understand it. I get it. I get it. And there you go. It's probably very low risk if you don't mind about the volatility. The dividend income, what is a 12% 10-year 5-year CAC? No, I said that wrong. It's too many numbers. The 5-year CAGR, I think it might have been 12%. Maybe I was right on that. We could look. Kevin, what's up, man? My Kevin Burgess. He's buying the Russell 2K and VTWO and IJR ETFs to get the exposure. There was an interview with someone on Seeking Alpha, and they said to avoid the Russell 2K. First time I've heard somebody passionately say that. And it was a quick blurb about most of the companies in there are not worth owning. Is that accurate? I don't know. Just somebody's opinion, man. Yeah, and talking about companies like EPD, Energy Transfer, Williams Company, I think, is another one, right? Is that the real beauty of pipeline companies is the massive moat they have to any future competition, right? It's going to be very capital intensive to try to build a massive network of pipelines and even facilities that take the oil off of the tankers and transport it. You know what, Trevon? For anyone that hasn't known, I should have started with this, spoiling some of the news, but you know what, man? I'm almost caught up here. We'll look real quick, and I'll show everybody that's on what SCHD did from our friend in the chat at Sunday Investors article. Pat, don't worry about being late, man. Yeah, let me get through. I'm caught up. Yeah, all right, here we go. So let's look at, let me hide this comment. Trevon, let's look at what SCHD did. I'll give you the real quick rundown. And this is where we're going. Yeah, we're going here, not here. I want to give more space. So I am on the article here, and let's go to the top. He has a real nice breakdown of it. Yeah, dude, Sunday Investor. If you're on Seeking Alpha, give him a follow. Hey, okay, watch this, everybody. Breaking news. Wish I had a news flash. Look it's as simple as this. Bing. That's almost embarrassing. I read your stuff all the time. I'm your biggest fan, and there's not following him. But you know what, man? If it makes you feel any better, I know I can't feel any better. Not butter. I can't be the only one. So there you go. Happy to give you another follow. Here he's got the key additions are United Health, Abbott, Procter & Gamble, Qualcomm, and Accenture. And it deleted Cisco, AbbVie, Valero, Halliburton, and CF. Isn't that Regions? Anyway, he's got the breakdown here. Let me just get to that. So he breaks down real nice about how SCHD works. But here's what you guys probably wanted to see a little bit of. These are the stocks that were added. So without reading them all at the top, United Health, Abbott Laboratories, Procter & Gamble, Qualcomm. So a couple tech here with it. Qualcomm, Accenture. Interesting, getting some tech exposure there. Comcast, Blackstone, ADP, Automatic Data Process. They were on my watch list, ADP. Devon Energy, Ares Management. And yeah, it gets smaller from there. So some of these are not very needle moving, I guess you could say. But somebody on a while ago was buying Hand My Financial. So those are the ones that were added. And then what they booted, and this is Seeking Alpha, the Sunday Investors article, was they booted Cisco Systems. So there you go. Tech in, tech out. AbbVie booted Valero, Halliburton, CF Industries. Yeah, I think CF Industries is fertilizer, I believe. LyondellBasell, yeah, they've gotten clobbered. Packaging Corp, Amcor, these were all removed. Janus Henderson, Radian, Signet Jewelers. Signet's going through it. A lot of the jewel with the lab-grown diamonds. So those were the ones removed. And then weights trimmed were Lockheed Martin and Altria. So there you go. And just a very well done article. Tons of comments. Yeah, so that's the quick version of the SCHD reconstitution. He did recommend maybe wanting to pair it, or no, a lot of people like CGDV. I know some of you do. Signet Jewelers, by the way, yeah, with lab-grown diamonds, completely upended the diamond industry. De Beers is likely going to be bought. They're all struggling right now. And I think the number I read was a 3-carat diamond that has come out of the earth, takes a little over 1 billion years to make, is going for about almost $60,000. But a 3-carat lab-grown diamond, which can be made in a week, and keep in mind they are still chemically identical. So that is going for about $3,800. So call it $4,000. So you got one, pull it out of the earth, 3-carat, about $60K, lab-grown diamond. I almost said lab-grown dividend. What's a lab-grown dividend? I don't know. Lab-grown diamond. For your diamond hands there, some of you are diamond handing SCHD. I guess I am. I've talked myself into a circle. Very, very much an industry in upheaval is the diamonds. I'm not a diamond guy. My wife's engagement ring, it came out of the earth, but do you even care? That might be bad for Borsheims. No, but because they can sell lab-grown diamonds. So I think it would just be the diamond miners and manufacturers, maybe not the jewelry shops. I don't know. Pat, tomorrow that should be at 4 Pacific. So for me, that's 6. And that's going to cut into my Monday evening exercise workout time. But it's okay. I'll make those sacrifices. I'm sure I'll be okay. Last I checked, I'm about 6'4", 190. So yeah. And we'll be on with Craig on Ryan's channel. There you go, Charles. What are you buying? You're buying GPIQ, GPIX. Buying SGov. Anybody buying Vici? It's almost flirting with the 26s. Great point. I love it. I love you guys making those. A lot of midstream companies are also contracted for minimum volumes, correct? Yeah, Kevin. Oh, dude, we might be cutting in on your. No, we'll be done before you. Yeah. Kevin goes long, right? Yeah, lab grown trending worldwide. That's funny, Jeff. I would have thought that too. But again, the lab grown diamonds are chemically identical to diamonds that are pulled out of the earth. It's just they're made in these space age looking pods where they compress them and all that. And it takes about a week. It really does. CGDG Laux Goga. I'm not familiar with the CGDG. The dividend value. Oh, dividend growth, right? DV is dividend value. DG is dividend growth. Lab grown dividend. You know what? I don't know how I'm going to do it, Steve, but somehow I may find a way to work in lab grown dividends. I don't even know I can't even think off the top of my head what that means, but right, diamonds, I don't know. Yeah, they do use diamonds, and I think they use them in some of the concrete blades. I have blades that cut through concrete. I think that might be those. But Chris, you're adding to Vici. We got to do news here. Oh my God. Well, it's almost 30 minutes in. We usually do it about the halfway mark, right? It's a good spot, so I'll go a couple more minutes. Yeah, adding Vici. So for myself, Vici is Vici. How did Darth say it? Remember when Darth, I think he said it's Wiki. I was like, that's fine. That's probably how they said it, but I'm going to say Vici. Why? Because, hey, that's my right and my prerogative over here in Chicago to say Vici. I ain't going to say no Wiki. But for myself, it's in a self-directed. That sounds weird. That's like Austin Powersy. Allow myself to introduce myself. So for me, it's in my self-directed IRA, which is locked in March of 2020. What timing, right? I pulled $30,000 from my 401k and put it in this brand new self-directed IRA. I opened up at Schwab, and yeah, exactly 6 years later, it's more than doubled. Well, let me see. It is it's gone down. It's 59,954. So kind of funny though, if this market activity keeps trend for the couple more weeks of this, I won't be a millionaire anymore. It's temporary, right? But all right, Charles, you're also buying Vici and Aries. Yeah, Aries has gone down. Yeah, I saw Visa under 300. That's and you're buying MasterCard too. Yeah, they were both gotten a little bit whacked. Ty says diamonds are just a bunch of carbon atoms, same as coal, hence the term into diamonds. And we're all atoms, right? We're all stardust. We're made of the same stuff that's in that makes up Jupiter, from what I understand. So some people are just carbon-based wastage. Carbon-based wastage. Anyway, that's me trying to be slick and steal a line from a Bad Religion song. I almost had the title. Industrial diamonds are highly valuable, including the oil and gas business. I didn't know that they're in the oil and gas business, Michael. All right, let's do Wait, I want to get to this. Your comments about Berkshire got the wheels turning for me, and I'm selling Nike to buy position in Berk B. Some pros and cons of what you looked at when assessing the company. Berkshire is massive, and Warren and Charlie tried to create a culture that is going to exist long beyond them. The wrinkle about Berkshire that Warren always wanted set up is that he wanted to acquire the best businesses run by the best people. He loved owning them wholly, right? That's his jam, is buying the whole entire business and bringing it inside of Berkshire. But he lets the person who created the company, who's running the company, but they just want to work on their business, and in their business, they don't want to have to deal with a lot of things that CEOs have to do. They just want to focus on their business. So they could sell to Berkshire. They would pay them a lot of money and they could continue working on their business. So he let them run pretty much autonomously, which is why I think that times they would joke that a ham sandwich could probably run Berkshire as well as they do. Tongue in cheek, obviously, but it's if you're going to try to put any kind of value on it, it could be tough. They've just started for the first time in a few years, from what I understand, buying back their own shares, meaning that they think it's fairly or possibly undervalued. Greg Abel, the new CEO, has bought shares with his own money. And it's just, Charlie Munger had a great saying that said, how do you say, if you don't, basically it's complicated, and if you don't understand how complicated it is, you don't understand it, type of thing. You know, diamond tip, I do use some of those. That's right. So let's do some news here, and I hope that answered your question a little bit. And it's insurance is their jam, I guess, is what I don't want to make the whole program about Berkshire, but one of the things that really built Berkshire was using the float from the insurance companies, meaning that when you buy your auto insurance, right? So if you're with Geico, Berkshire owns Geico, you send money to Geico, but they may never have to pay you out any money. So when everybody does that, they take in money and then they're always paying out money, but there's a gap in between that, and that's called the float. And the float, Warren loved investing into the stock market, into bonds, into company bonds, into treasuries, buying other businesses, reinvesting that float. So it essentially was like free money that, and they still do get to use. And I guess the question will be, can Greg Abel and his team allocate capital as well as Warren did? Eddie, it's a massive float, and trying to keep it short, because again, I could spend the rest of the episode talking about Berkshire. Go on Berkshire's website or Google Berkshire companies. You will see how expansive it is. They own everything from Brooks Running Shoe to insurance companies, reinsurance companies, BHE, Berkshire Hathaway Energy. So they own energy companies. They own oil, right? They just bought a portion of Occidental Petroleum, right? And insurance companies, I said, Jazzwares, they own Oriental Trading. That it's such a big web, and then a lot of their subsidiaries have subsidiaries of their own. So the Berkshire web, real estate they have, right? Berkshire Hathaway Home Services. The Berkshire web just keeps going out further and further. Burlington Northern they own. And all right, so let's do some news, because if you get me going, it is very close to being, it's almost its own ETF is what it is. So, right, 50 publicly traded, 20 that they own 100%. But within those 20 or so, there's, again, subsidiaries. And all right, let's do some news, because we don't want to turn this into the Berkshire Hour. I mean, but yeah, I got some fun news, interesting news. As soon as I can pull it up. All right. So I'm reading your comment there. Yeah. Come on, guy. You teased us. Here you go. So this is Simply Safe Dividends. Let me go down a little bit. I usually have this set up, but I think we left off here where they refreshed our outlook on Pfizer. This is Simply Safe Dividends.com. You don't have to be lonely. Simply Safe Dividends. They should have a farmers only version for investing. Do they have that? Anyway, National Storage agrees to be acquired by Public Storage. So we got consolidation going on there. Public Storage is buying the self-storage company, NSA. And then, ladies and gentlemen, if I can make this, because I want to get it on the screen, because you can pause the video if you want to read this a little more. And this undervaluation, they have a valuation that they use based on the 5-year average of the price to earnings ratio. So it's a guidepost. It's not a be all end all, of course. Qualcomm, which is now in SCHD, raised the dividend 3.4%, 23rd straight year of dividend growth. They refreshed an outlook on Cisco. An outlook is just Simply Safe's, the people inside of it, Brian Bollinger and his team. It's what they think about it. It's their own take on it, and it's not scraped from anywhere else. So it's unique. And then Public Storage, look at that, got a dividend downgrade because they are spending $10.5 billion on an SA. Williams-Sonoma, 15% dividend raise. They have been on fire ever since I decided not to buy them. BlackRock Utilities Infrastructure and Power Opportunities Trust. They reaffirmed their safety score of 70. It sounds like a close-on fund to me. I wonder if it is a CEF. A couple more here coming at you. Micron, 30% dividend raise. And man, that's one that was on my watch list, and I never dug into them. All about memory. We're all starving for memory over here. Dividend downgrade for Fidelity National. Does anyone own ticker FIS? I'd love to know if anyone out there is individually owning. Yes. If you invest in a fund, VOO or something, of course you own it, but dividend downgrade. But it's an itty bitty teeny tiny little sliver and not one whole share. And then lastly, Unilever. Look at that. This one was interesting that Unilever is exploring selling their food business, completely exiting out of food to McCormick, ticker MKC. And yeah, this was interesting. The remaining food business they think is worth about $33 billion. And it's roughly a quarter of their Post ice cream, right? They spun off Magnum. I wanted to say Magners, but I think that's cider in Ireland. All the kids over there love. But yeah, and then because of that, if they kept the dividend the same, their payout ratio would be about 80%. So that's interesting if anybody is investing in Unilever. But yeah, nothing. And then I said nothing's been finalized yet. So it would be a complex deal. Will it happen? We don't know. And I did say for you, BAM, Brookfield Asset, it is a very, I don't want to look through my phone. It was a really well done interview. I want to say it was Business Breakdowns that did it. But yeah, Brookfield Asset, it's a big web. And I don't even know if this is because there's Brookfield Partners, there's Brookfield Asset Management, there's 3 or 4 others. So 60, borderline safe. And I've never dug deep into the company. I started to get into it and I got a little confused with their with the web of Brookfield companies and how it works. If anybody has a better explanation, please put it in the chat. Yeah, they're Canadian, and Simply Safe thinks they're a little bit undervalued. But yeah, that dividend yield, interesting. Market is worried about something because the yield, when you see the dividend yield is way above its 5-year average and the forward price to earnings is way below, the market is saying something's going on here. You need to do a lot of due diligence when it's at a 52-week low. So what that is, I can't speak intelligently on it, but yeah, it's I just don't know, my friend, enough to Seeking Alpha. Go to Seeking Alpha. Get yourself a free trial. Read everything you can. Ask AI to help what it can tell you. But yeah, I don't know enough about that. So what else were we gonna do? I don't know. Let me come back to you guys. I miss ya. Oh yeah, we can. Well, I'll be in Omaha on May 2nd. So my wife and I are going down the Friday before to spend a few days in Omaha. So yeah, Turbo, that's exactly. And this is, again, the cognitive dissonance, where when I said I was a strict dividend investor, and not only that, but I would want to have like a 2% yield minimum. And again, if Micron was $130 a share, and it even had obviously the yield would have been a little bit bigger, a smidgen, but man, I guess everybody has to answer a question or ask themselves a question and answer it. Do you want more income or do you want more money? Right? And they may not always be the same. So I want more money, but I also like having that stream of income. So I haven't figured out exactly where that is yet, but it is a curious thing when a lot of people say, yeah, I don't care about beating the market. And then I take a lot of dividend paying companies and do a total return calculation over 3, 5, 7 years. And to see that with dividends reinvested, even something like VOO beats those companies, it's like, gee, yeah, they spit off some income, but having more money would be nice too. And then again, people will say that they'll just buy more income when the time comes. They'll be all growth and then just buy income and start to preserve your money that way. So again, everyone's on different journeys. None of this is financial advice. You have to, I guess, know. I hate saying that, you have to know. Are you in wealth preservation mode or are you in wealth accumulation mode? Are you trying to grow your money as quickly and bigly as possible? Or are you into preserving that wealth where you don't care about keeping up with the market? You just don't want to see it fluctuate down. So yeah, Ben and Jerry's. I think Ben and Jerry's went with the Magnum, right? It's Magnum. Am I hallucinating? Let's see. Yeah, Magnum Ice Cream Company is MICC. And they don't list what's in there right now, but MICC, Mike India Charlie. There you go. Oh, good one. Harrow, my average cost is, I'll have that for you in a second. My average cost on Harrow is, where are you, Harrow? It is $18.14. So I'm up 83%, but it was over $50 a share, and it's pulled off. It's one of my coffee can companies. I have a feeling that someday, because of everything they keep doing, I could be wrong, I think it will be flirting with $100 a share one day. Is it in 6 months, 6 years, or 16 years? I don't know, but I'm trying not to make too many, and there's always a lively discussion on Seeking Alpha around Harrow in the comments. I'm just trying not to make predictions. The main thing I'm looking for is, are they keeping on growing revenue, right? As an investor, that's one thing I've learned that is very, very important, is revenue coming into the company, whatever it is you do. If revenue keeps coming in, or almost on a worst case scenario stays flat. Revenue growing, it means there's demand for your product or your service, whatever that thing is that you do. If revenue starts tapering off and it's consistently dropping for a year or 2 or 3, that's a big problem because it means the demand for your product or service or your company is drying up. And it's really hard to grow a company. And if they pay a dividend, keep a dividend growing if the demand for your product or service is declining, right? So recently started in Blackstone. And Blackstone, by the way, I found there's a dock equipment company that we sell their products and I install called Systems Inc. And they were bought by Chamberlain Group. Chamberlain Group does door operators. Some of you might have it. Chamberlain Group is owned by Blackstone. So not enough to make me buy Blackstone, but now I don't have to, right? It's in SCHD for the time being. Private credit, definitely that. One of the things, if you've noticed insurance companies dropping, and we were speaking about float, well, some insurance companies apparently have put their float into private credit. And the ones that have more exposure to private credit with their float, they've gotten hit because the market's jittery, the market's nervous. So that could be something interesting. Kinsale Capital, I bought 2 more shares of Kinsale this week because they've gotten dragged down, I think, unfairly with the whole sector. And talk about a tiny yield. I don't even know what it's so small. They pay $1 a share per year. And I bought those shares this week around $330. So Kinsale Capital has virtually no exposure to private credit or to private equity, I should say, or private and anything, any loans, anything to deal with the private equity, but it's getting hammered along with all the other insurance companies. Plus they got a analyst ratings downgrade. So I think it's a good time to buy. And yeah, apparently Francois Rochon from Giverny Capital, he was on We Study Billionaires. I probably should have shared that one, but that was good. Aaron, what's up, Aaron? I did not start a position in Accenture, but kind of I did because Accenture was added to SCHD. So D's, we always love it. Don't worry about it. You watch on 2X, man. Well, if anybody's watching on 2X and I start talking like this, I'm going to go so fast you will have no way of keeping up with what I'm saying. That's right. In a former life, I was the Micro Machines guy, which is a cool trick because I was alive at the same time as the Micro Machines guy. So that's some Inception stuff. Thanks, David, for pointing that out. I do. Do you think it's immature to avoid looking at your portfolio on a bad day? No, man. If it's going to cause you to panic and get heart palpitations and potentially need medical attention, avoid it. Some people will look at their portfolios, I understand, once a year and make decisions once a year, which is crazy to me. I'm a little bit of an addict, I admit it. And, you know, for better or worse, most of the time I look, you know, maybe 30 to 40 times a day, but I have a little, it's cathartic to me. I can't explain it, but it's called, I've had this since 2017. It's the stock tracker app. I know. Oh yeah, that's great. Oh yeah, look at, we can really tell. I don't know. It's just called Real-Time Stock Tracker. And I love it. There's something, got ads. There's something cathartic about it, I think, and relaxing to me to see the numbers flittering up and down. And well, you guys know what it looks like, but just something like that. Oh, you stupid camera light. Anyway, look at this. You get what am I showing you? You guys know what this would be handy if you all were from planet Zebulon and you just landed and you have no idea what a stock is. That would make sense, trying to show you guys like, look, This is what a stocks tracker looks like, right? But you mentioned, oh, Lisa, what's up, Lisa? Yeah, I was working today, Lisa, and driving home, and I saw your live. I'll get on another one. You mentioned being in accumulation mode on accumulation or preservation, wealth preservation, right? Any tips on how to do both at the same time? I love your growth stocks, love your dividend stocks, and I've been dabbling with SGov and TLT. Well, you're going to put more of a drag, I would think. Again, not a financial advisor, just my opinion, things I've read. And if you have a lot of years till you retire, so if you, I don't know, if you have 20 years or so, 10 years even, 15, 20, till you retire, you want that growth. I think that the compounding will be more immense with something just as simple as VOO or VTI, or a popular one, SCHG, right? We've been talking about SCHD. Well, SCHG, which I've forgotten my phonetic alphabet for G, golf. So SCHG is going to give you a lot more growth, and it's nobody can answer that but you. Can you do both? Yeah, I mean, right? That's why some people do the 60-40s. I know if you want something as simple like that, if it helps you sleep well at night and meets all your financial projections and goals, 60% stocks, 40% bonds. Now you do 80% stocks, 40% bonds, or that'd be tough. 80% stocks, 20% bonds. Oh, hey, if you want immature, go hang out on StockTwits. I also check StockTwits too. It's fun. StockTwits is unfiltered, and you will get plenty of people's, well, I won't say honest thoughts, because remember, I went and checked our Portillo's. A lot of people on the Portillo's thread on StockTwits said that it's essentially painting a picture that if you went to Portillo's anywhere outside of the Chicagoland area, that it's basically inedible, my friend. You can't eat this stuff. It's garbage. You're going to throw up right away if you want to eat it. So I boots on the ground research. I went to a Portillo's in St. I went down to Florida. It was St. Petersburg Portillo's. Hey, we had my wife got an Italian beef sandwich. I had a Maxwell Street Polish. God, I love that Maxwell Street Polish with the grilled onions. So it was wonderful. It tasted very similar to home here. And that was my first time at a Portillo's outside of the Chicagoland area in Florida. Oh, it's funny, Lisa. I don't know. Is it healthy? But I don't freak out about it. But I don't know. I love it. And I get sad. I kind of get sad. So I'm here in Chicago and the market closes at 3:00. So, I'll be working and I check all day long and I start 2:57. I'm like, oh, it's going to stop moving in 3 minutes and it won't start again until 8:30 tomorrow morning. But obviously there's aftermarket and there's pre-market. So that's why I like StockTwits, because this freezes, but the StockTwits app, it'll update all throughout the aftermarket and the pre-market. So that's kind of why I like you. See, you want to talk about an addict. So the stock prices stop changing on my real-time stock track app. And then I go to StockTwits so I can see the prices changing more. So how about that? Talk about an addict. I need more of a hit. Farmers, yeah. Tony, you don't have to be lonely with Farmers Only. And I understand it's not just for farmers. So, Ty, getting married in Chicago at the end of the year. Restaurant you talked about so much, Portillo's. I don't know. Don't get your expectations too high. It's not a Ruth's Chris Steakhouse or something like that. It's, burger and hot dog joint that a lot of us around here are fond of it. I love all you guys looking portfolio updates all the time. Only pay attention if you're deviating significantly. You know when it's bad? This is when it's bad. When, for instance, I bought a share of Kinsale at, I want to say like 330, I don't know, like 334 or something. And lo and behold, like 5 hours later, it's in the 320s. And I'm like, "Ugh," I'm like, I knew I should have waited. But then I pull back, when in doubt, zoom out. And I think if someday it's pushing $500 a share again, which it could, is it really going to matter if I bought that one share at 335, 325, 315, or 350? A, a little bit, but I'm not buying 100 share lots. So Dan, this is why we love you, Dan. Dan is, honestly, dude, I'm a little bit jealous. I know I think it might have been Jordan Peterson, somebody like that, who said, if you really want to go on an adventure, only tell the truth. So yeah, that's Energy Epstein War. I thought it was called Operation Epic Epstein Distraction or something, but well, we shouldn't joke about something like that. So Dan, very unfiltered. I love it. I'm not there yet. Maybe someday I'll grow up to be just like you. Raising Canes, yeah, those are here. David Senra from the Founders Podcast started doing interviews, and I think it's just called David Senra, something like that. But his first one was with Ryan Graves. I don't remember it, Mr. Graves, the founder of Raising Canes, and it was really well done. What a story. Amazing how Raising Canes almost didn't come about. He had to go work on, I think, an Alaskan lobster boat where he's literally risking his life to get more money to put into his dream of raising canes. So really good. David Senra, yeah, really, really good. That's fun watching the dividends coming, but it's slowly. Pat, that hit is like that, man. Pat, the hit's like that. In the morning, yeah, I see what I got paid. And then I'm like, okay, that's great. But which it is. Then I get to look at what I'm going to buy. Never had a Charlie's cheesesteak. Interesting. Oh, Dan. The union job security is golden these days. Untouchable. It's a good movie, by the way. Also filmed in Chicago. Elliot Ness and the Untouchables. I think he had Robert De Niro playing Al Capone, good old Scarface from Chicago lore. As we're winding down, the thing about Chicago that you got to pay attention to when you come here, almost every establishment has an Al Capone story. The ghost of Al Capone ate here, Al Capone, Al Capone used the restroom here. Al Capone drove by and at 35 miles an hour and looked at this building type of thing. They got a plaque. Yeah, it's crazy. The ghost of Al Capone goes to more places than the guy did when he was alive. But around here in Chicago, any building that was standing in the 1920s till today has some kind of Al Capone legend or lore. And it's so funny because it's like, yeah, it's like money. Hey, if I started a business, I would, whip up some Al Capone ghost stories. And how hard would that be? It's reported. It's rumored that Al Capone came here once and he talked about Zaxby's. That's where Zaxby's came about because Al Capone was in a drunken stupor. I don't know. You can tell it's, see, those are fighting words. Raising Cane's is gas station chicken. Hey, some gas stations are mighty fine, right? Casey's with their pizza. I've yet to have it. I can't bring myself to try it, but I think it's like the number 3 or number 5 largest pizza chain in the United States. There's a mafia themed bar on Bourbon Street even. That's funny. Al Capone? Probably. The guy. Hey, there's Al Capone ghost stories from places he didn't even visit, D's, of course, already, you know? And you guys, it's your Sunday night too. I don't know who's up next. Not for me, not my problem. But with this guy, it's been rumored. This guy may. We started watching Man in the High Castle. It's an old show. We just started it. So this guy may have a couple of Guinnesses, Diageo, trying to support them and shut the brain off for a few hours before we start it again. I love it. Oh, tomorrow night, you got to tune in. I'll be hanging with Ryan and Craig. I never know what to call Craig, Stan or Craig. But anyway, so thank you seriously for spending some of your time with me. I really do appreciate it and sharing some of what you're learning and doing and correcting me when I'm wrong. But Michael, appreciate that. Yeah, everyone. Dude, thank you so much. And I'm going to get out of here. So we'll see you same place next week. And that's all I got.